Well, welcome back everybody to the Blackfire YouTube channel. I'm your host, Crypto Bro, and this is another edition of the daily live stream. Welcome back everybody. Happy Wednesday / early Thursday morning. And before I begin, I want to remind everybody that the following content is provided as educational and entertainment purposes only. I will never tell you what to do with your trades or investments, as I am not a financial advisor. The stock market is extremely risky, and you should conduct your own analysis and due diligence prior to making any trading and investing decisions. If you do decide to make a trading or investment decision based off the speculative content that I provide, please understand that this disclaimer legally relinquishes me from any and all responsibility. With that said, welcome. Hello. Peace and love to you, brothers and sisters, and everyone alike. We are back. And we have plenty to talk about today. We definitely have plenty to talk about today, including 4 positions. 4, yes, count them, 4 traditional stock positions that I happen to open and place a decent risk management point upon. We will definitely cover that. We will cover the few requests that we do have on today's table here today, left in the Blackfire Technical Analysis page on Facebook. If you guys like the content here, hit that like button, hit that subscribe button, tick that little bell, and anything that I can get helps the YouTube algorithm. Definitely helps the channel out and helps us progress more and more to the future, right? So we're gonna go ahead, start things off here as usual with actually let me check my desktop my audio here. There we go. Make sure that the music's not too loud, but it's still loud enough for you guys to hear. All right, so we're going to look at Nasdaq here. The thing that caught me off guard here was this bearish divergence call that we did. It's not confirmed yet, I don't think. Yeah, it's not confirmed yet. We still have 16 hours, 26 minutes left in today's candle on this one here today. I do imagine that if we close below the open of yesterday's doji style candlestick here, 15,450 or 350 here, I will believe that bearish divergence will hold true here, and it will confirm. And again, the projected target from my perspective here, the first one I'm looking at to the downside is 15,179. We'll just round it up to 15,200, give or take a few bucks here would be my projected target here for price action. Again, if we do see that that price target here confirm that bearish divergence call here, and I do believe that it is being called from this point here. Yes, I do believe it's being called from this point. From this point to this point, it's still a lower high. And it will. I feel stupid for not realizing this. Bearish divergence doesn't come from just the prior point, right? It can come from this point here, this point here, this point here. Any, in my opinion, any low or any high that prints on the RSI below this prior high here in the bullish control zone will confirm some type of bearish divergence here, and we are seeing that play out just a little bit. And again, if we confirm it, it will play out more. However, we do see Stochastics here building that momentum, still very, very strong. I still think this market is extremely strong. I have no indication to be looking for any kind of reversal style formation here. Why? Because we don't have the evidence of that, right? We're still trading above the 21 exponential, and as long as we remain above the 21 exponential, I am going to remain long-term bullish, still looking for that 1.272 Fibonacci target to be met at some given point in the near future. You could argue that this is a close enough of a test to consider it a test of the 1.272 here. It all depends on where your fibs are, lined up. I'm using candle bodies here for my fib extension targets here. So, even if I extend it, it raises that 1.272 Fibonacci extension a little higher. So, I'm comfortable with candle bodies on this one, and I do believe this one is extremely accurate. So, while pullback is indicative of seeing new all-time highs in the market, which we did confirm yesterday, even though we got, that reversal style candlestick here, this is still printing a new all-time high here. So again, anytime I see new all-time highs print on any asset or even, new highs, I'm always looking for, specific targets to, give it a little bit of resistance, right? They're not supports, right? So not support and price action. They're gonna do the opposite, resist price action. We could in theory argue that this is potential resistance right now. We are seeing a little bit of sell-off pressure here upon achieving that new all-time high. Again, which is kind of to be expected here. And a pullback all the way to the 21 exponential could also be another possibility for this one to the downside on Nasdaq. And again, as long as we remain above the 21 exponential here on a candle closing basis, I have no reason to think that this one's going to start, dipping down towards those, lesser targets to the downside. However, if we do see some kind of like whoop, signal, right, reversal style signal here below the 21 exponential, I will be forced to look for a target move first to the $14,900 region, followed by maybe lower, to the $14,600 region. But again, we've had these dips below. I do believe this dip below was actually a test of the green 55 exponential here. Boom, bounce right off of that launching pad back above the 21 exponential to achieve new all-time highs. So as far as price action is concerned, I'm still exponentially bullish here. Although all this bearish divergence it's not sitting with me well, right? You never like to see 1, 2, 3, 4, 5 stabs of bearish divergence play out on on a significant uptrend. That is kind of a signal of something to come. However, again, as long as we remain above that 21 exponential, I'm going to be looking at this bearish divergence to potentially play out to the first target to confirm it as new tentative support right at the breakout point of 15,179. And that's kind of how I'm looking at this one. Again, not too much outside of that. A little bit of sideways, boring price action. A little bit of a new all-time high being printed here today, and not much in the last 3 days, other than just a little trickle up and then just a little trickle down so far. Again, we have plenty of time left in today's candlestick before making any kind of judgment calls based off of it, but. It could be boring. It could be boring for the next couple of days, or we could hit some heavy resistance along this region and see a sell-off to test a new support here. So that's kind of how I'm looking at Nasdaq for now. Let's check out SPY futures. I think it is the same disposition, more or less. Yeah, more or less the same disposition here on SPY futures. What do we see? Yeah, a little bit of a sell-off here. We haven't quite extended to the 1.272 just yet, but we did confirm new all-time highs today. And again, new all-time highs, I'm always going to be looking for some kind of sell-off. Although we did confirm this region as support, maybe we see a little bit of consolidation. Maybe we see a little bit of a range, start forming out here as, price action starts to cool down. Again, this just stair step to the heavens here on price action. Again, remaining above the 21 exponential, except for a few one-off stabs below, but still, the recovery above still confirms it as support, and we've seen that multiple times here. I do believe these stabs were either cyan 89 or the green 55. Doesn't matter. It's not part of my strategy. As long as price action remains above the 21 exponential, I am going to be, more bullishly biased, looking for upside targets here. Now, we do have the potential to see some bearish divergence here start formulating on the stochastics here. Again, we are just seeing a fresh breach into the bullish critical zone here. So if we do get some kind of top call, I will look for stochastics to curl over, and I will look for bearish divergence to be confirmed on stochastics. More to the point, we do have that's not what I want. What the fuck? That's not what I want. I want this. We do have no. We don't have a fork, but we do have a little bit of a rising trend line here on stochastics. A little bit inconsequential in my opinion, but it's got 3 touches, so it is valid. There is some validity to this trend line here. I'm focusing more on the the longer term here. This diagonal here. If we do see this structure here break to the downside, this will be the first area that I'm going to be looking for stochastics to kind of test. Give or take. And again, that would be in confluence with a breakdown below the 21 exponential. If we do see price action at any given point break below the 21 exponential, I will be looking for the first targeted move to the prior low here, somewhere around 43.87, spot 50, give or take a few bucks, but likely a stab down to 43.78, right? And that's kind of my first projected target to the downside. Again, if the condition is met, and breaking below this support, this is confirmed as support, so breaking below this, I would look for a little bit more of a test of the 21 exponential once again. That would not be out of the question in my opinion, but again, as long as we remain above that 21 exponential, I have no reason to say, it's time to short, not at all. This actually being a little bit of a fake signal, a false signal here on the 21 exponential could have shaken a lot of players out, especially if you were looking to short here. This could have definitely been viewed as a bear trap. Again, from the 21 exponential perspective, let's look at the RSI. What is that telling us? Still stair-stepping its way onwards and upwards, putting in a series of, higher lows. Although we don't, we did get a higher high, barely, but we got a higher high in the bullish control zone. And again, another potential for some, for some bearish divergence here in the RSI in comparison with price action. Again, anytime we see a higher high print on price action and a lower high print on momentum oscillators, the case for bearish divergence will always be present, right? So we do have potential bearish divergence formulating now. unless we remain above this support and see continuation and see new highs printing on the stochastics and the RSI. I will be convinced that if we do put a top in here, bearish divergence will likely play out to the downside, and I will be looking for the 21 exponential here as the first target. Outside of that, you know, business as usual. Business as usual, everybody. Business as usual. I'm still looking for that one spot 272 at some given point. Been looking for it on the big two for quite some time now, and you know, until proven otherwise, I'm still very bullish. Although we have some bearish divergence potentially in formation on Nasdaq and SPY futures, I'm still extremely bullish on these assets here. Let's go ahead and check out Dow Jones. Still not putting in new all-time highs. I know that for a fact. Give me 1 second, everybody. Woo! We'll check it out. All right. Yeah. Look, another reversal style candlestick. We've gotten 3 reversal style candlestick closures on the daily chart, on the daily time frame, 3 days in a row. Right. But still proves very valid. We're still closing candles above the 21 exponential. I am still going to be looking for extension to test that all-time high resistance here at 35,630, right? And a break above that, I will be led to believe that an extension to the 1 spot 272 is likely. We do see right here, look, this is why these critical levels are so important. Look at the 50 read that I have highlighted here, right? The 50 read, and I'll get the other ones here. I do have them on the other charts. We're gonna do some adjustments here, right? 65, come on. 65, okay. We're gonna get one down here in 35 region. Settings, 35. Oh no, 35. Thank you. Thank you. This is why these critical levels are so important, guys. We are already seeing stochastics, you know, after this break through the critical zone, break through the bottom side of the bullish control zone, we're finding support here. It does seem like we're finding support here along this 50 read here. And if we do find support along the 50 read, I will take that as a bullish signal. You know, because momentum, you know, finding support at the 50 read, gaining positive momentum again tells me that the bears really never took full control here, especially with this huge, you know, fake out, right? Fake out, you know, on the 21 exponential moving average strategy. We got that secondary candle closure below. That was my indication to say, yep, it's time to fucking short. But guess what? Boom! Just kidding. Fuck you. Not today, right? Price action continues onwards and upwards, and I'm still looking for a test of that all-time high. Again, stochastics bouncing off that 50 read at the current moment in time. I am interested to see what price action does tomorrow, and this little fork off here of the long-term trend line here that we have printed on RSI is still, you know, holding true, right? We just saw a fresh break above the exponential here, forcing it back to a positive slope. I take that stuff very seriously. The exponentials on RSI and stochastics, I take that very seriously. But if we get a top here, right? If this reverses and comes to the downside, I will be on downtrend alert, right? I will be on downtrend alert. Nothing confirmed, right? It'll just be a warning shot. Hey, we might have a downtrend in formation here. We're starting to see momentum wane, right? We're starting to see that momentum dissipate from the bullish perspective, and we're seeing a lower high print as a result, right? If we do get a lower high, I will have no choice, given my trading rules, to be looking for a lower low at some given point, right? We don't. That's not to say we have to see a lower low. It doesn't have to happen that way, but it's going to be on my radar. Golden Owen says, "Hi, can you do BTC?" Of course, I will get to BTC. I have a couple of more assets to cover first before I get to BTC. BTC being the main course, in my opinion, of this channel. I will definitely do BTC today. But for now, I'm going to continue on with what I'm gotten right now. Again, Dow Jones remains above the 21 exponential. I don't have any reason to look for any major downside decline here, but there are a couple of warning shots. You know, potentially in formation here. Again, a potential lower high structure on the RSI in conjunction with a lower high structure, potentially in formation on price action here. Again, it's not confirmed. Nothing is confirmed just yet. But if we do get a lower high here, that'll be warning shot fired number one. That'll be warning shot fired number one, and I will be looking for a back test of the 21 and likely much lower, possibly lower than the prior low here at 34,700, right? And if we do confirm a lower low here in price action, we will have a change of behavior confirmed on the daily time frame. Again, Nothing's confirmed yet. I'm bringing it to your attention that it is a possibility, right? It is a possibility. My bias says continuation, right? My bias is sticking with the 21 exponential strategy, and the 21 exponential strategy is telling me right now continuation to the all-time high resistance. So a couple of things to put on your radar here for Dow Jones. We'll go ahead and move on. I'm very curious. Dixie is extremely important for this analysis here. We're going to check it out. Ooh, okay. So we have a confirmed break of the 21. Warning shot fired number 1. Let's go to the stochastics here and identify these zones. Let us see. We're going to take the time, all right? The stream is about being accurate and taking our time. 65. Boom. We're going to get all 3 zones printed here. 65, 50, and 35. Settings. I do apologize if this is taking some time. I don't care. This is what it's all about, right? This is what it's all about. So, boom, right off the bat, we already have stochastics breaking through the critical 50 read, which is a sell signal in my opinion. What the hell just happened? What just happened? Where's my shit? Please go to 35. Thank you. Okay, so we got stochastics. Number 1, rejecting the critical zone here, printing bearish divergence. Again, in conjunction with the first high being printed here, and then a higher high on price action being printed here. We can line this stuff up here and get a clear picture of what's going on. Right? Here's your new high. Bearish divergence printing on stochastics, following all the way through. We have a fresh break of the 21 exponential. What does this mean for price action? It's got me a little excited. Right? Personally speaking, I want to see the US dollar index fucking die. Why? Bull markets, bitch! That's why. Bull markets everywhere else, right? Traditionally, typically, when you see downtrends or downside decline in the US dollar index, you see some green on the other side as a result, right? So this has me looking at it as warning shot fired number 1, right? Warning shot fired number 1, followed by the 50 break is warning shot fired number 2. What is RSI telling us? New lows? No, barely. A warning shot fired number 3 has not been confirmed, at least in my opinion, until we see a new low print on the RSI, which I do believe is a possibility if we do confirm the 21 exponential here on price action today as new tentative resistance. Any closure today, not tomorrow, not a week from now, today. Any closure today below the 21 exponential moving average will be the final confirmation that I need to be looking for downside targets to extend to the prior low here first, 92.51. If we take out 92.51, we will have a confirmed change of behavior on the daily charts, which is indicative of a downtrend, right? And it's not to say that we couldn't see this bounce up first, test this resistance here at 93.26 and print a lower high, but we're seeing all this downside pressure on the 21 exponential right now. While we are seeing it hold as support at the current moment in time, we have plenty of time left in today's candlestick before any judgments can be made. Again, this is just to put it, just put it on your radar. It's on the radar, right? You don't have to... Again, the most important phrase that I say is prepare for everything and expect nothing. I don't expect jack shit, right? I'm just going off of what the chart is telling me, right? The chart is telling me we've broken the 21. That's warning shot fired number 1. We've seen the stochastics break below the 50 read. That's warning shot fired number 2. We don't have warning shot fired number 3 on this yet, except you could argue... rejection of the bullish control zone not being a very good signal, and the fact that we're still below the the exponential on RSI could be a potential warning shot fired number 3. But again, nothing is confirmed yet until this candle closes. If we do close above the 21 exponential, I'll be confident that it's going to hold a support. I'll look for extension to the first target here at 92.96 first. And if we do get a low call, we will have a higher low confirmed on this price action here, and I'll have no choice but to look for an overall target of that 93.27 target here. Again, uptrend, the trend is your friend until the end of the trend. The trend is not in threat at the current moment in time. However, we do have a couple of warning shots being fired off, in my opinion, right? I could be wrong. This thing could just shoot to the fucking moon tomorrow, today, whatever. But as far as the chart is telling me, we have some pressure. We have some pressure to the downside. It's very evident, again, with that stochastics breaking that 50 read, very, very evident that we have some pressure to the downside, and that evidence with the pressure, with the price action closing below the 21. it's time to pay attention. It's time to pay attention, in my opinion. Again, all based off the 21 exponential moving average strategy. It's definitely time to pay attention to the US dollar index, because a break below, a confirmation closure below the 21 exponential is going to be vastly exciting, in my opinion. So that's where I'm going to leave Dixie for now. Let's go ahead and check out. You know what? I'm going to do Bitcoin first. Fuck it. Why not? Let's check it out. Woo! Not the price action I saw at work today. Holy shit. Okay. What the fuck? All right. So we clearly have a defined area of support. I'm gonna go ahead and move it down to clearly define. We have a range, everybody. This is a range. This is clearly a range. Again, until the bottom side of the range is broken on a daily candle closing basis, I am going to be looking at this as a range, right? Top side resistance, rejection, bottom side support, supported, top side resistance, rejected, bottom side support, currently being supported, right? That's a range. That is as cookie cutter as it gets as far as consolidation phases are concerned. Again, we're coming off of new highs in price action, right? We're coming off, off this extremely powerful move. And we did mention yesterday that this could potentially be a bear or a bull trap formation, right? Which would be indicative of the bear market potentially, in full swing here. Again, this high being confirmed as a lower high, followed by massive decline to the downside, would be indicative of a bear market potentially in formation here. Again, we go back to that one indicator that I mentioned to you yesterday. Let's see how it's holding up here. We're going to turn off CT MAC here, bring on the HMA, and then go to the weekly, right? Let's see how it's playing out. Yeah, see, look, still rejecting the 104 HOFV moving average here on a weekly time frame. If we see this close below the HOFV 104 on a weekly time frame here and confirm a top on RSI, boy, oh boy, will I be convinced that we are potentially in the precipice of an official bear market for Bitcoin, right? Again, higher time frames take precedence over lower time frames. I do take the weekly time frame seriously, especially as far as market cycles are concerned. I look at the weekly. While I do trade the daily, and I could care, 5 shits less about the market cycle on the daily because I'm playing the 21, the market cycle is important to pay attention to, right? If you're getting ready to prepare yourself for some longs and you get, evidence that tells you, hey, it's probably not the right time to long, you're probably going to get fucked in the butt a little bit, right? You're probably going to get some of them red candles shoved into your face while you're losing a bunch of your money, right? So we have evidence, right? We look at the evidence, we build a case, we see what's going on structurally, long-term first, right? The weekly. I look at the weekly all the time. Although I don't bring it up on the stream too often, I do want to bring it to everyone's attention when it is absolutely validly relevant, right? And right now, in my opinion, it is extremely relevant to be paying attention to the weekly time frame with the HOFV 104 moving average right now, right? And again, we'll go over the few examples from the past here. Why this is so valid, right? We got the 104 printed right here, right? Here's your first blow off top in 2013. What was this? Almost $1,000, and then boom, we get a weekly closure below. See a little bit more decline, followed by boom, a back test, and then boom, year-long bear market, right? It doesn't look like a year-long, but again, you got to remember this is a weekly time frame. Every candlestick that you see is 1 week's worth of time, and definitely lines up to be. A little bit of a bear market. And then boom, bull market here, all the way to the 2017 blow off top in December, followed by what? Boom, confirmation closure below, back test, rejection, year-long bear market. Another little bull market here, followed by boom, back test, dump. Bull market, followed by what? Confirmation closures below on the weekly time frame, followed by a back test. What are we looking at, right? What are we looking at right now? We are currently looking at the weekly candlestick here on this price action chart for Bitcoin rejecting the HOFV 104. Now, my mind will change. My mind will change if we see the weekly candle closure above the HOFV 104. Then I'll be like, oh, maybe you have a little something else going on here, right? Maybe you have a little something. Again, past market performance is not indicative of future market results. Again, it doesn't have to happen that way. It doesn't have to happen that way at all. However, the evidence that has been shown to us in the past tells us that this kind of price action is extremely relevant to pay attention to, right? So we're going to go ahead, leave that there, go back to the daily. I think I got a comment here. What does it say? Golden Owens 13 says, what is your target if BTC goes down? Based off of my strategy, which we'll go ahead and bring back up, we'll talk about that. We'll talk about all that juicy shit, right? We'll talk about all the juicy price action in Bitcoin right now. Here we go. Daily time frame is consolidating at the current moment in time. We're seeing rejection at a very, very significant point of confluence here. A lot of touch points on this resistance line here. Again, what was, let me go ahead and mark it off. Let me go ahead and mark it off. What was tentative support here, has now flipped into new tentative resistance. Okay? So we're seeing that play out for sure. It's marked off. We know about it, right? So it is acting as resistance at the current moment in time. We're starting to see consolidation formulate as a result off of that resistance. So what are we looking for, right? Very simple here. Very, very, very simple that I'm looking for here. I'm either looking for the bottom side of the range to break, right? And if that condition is met, I will look for the 21 exponential. If the bottom side of this range is broken on a daily candle closure basis, that is my time, per my strategy, to really start laser focusing on potential decisions that I'm going to have to make from my own position. Do I get out? Do I hold? Do I wait? Right? All possibilities that I have to think about. I will be looking for a targeted test of the 21 exponential. But again, per my strategy, I have to stick with my strategy's rules as long as we remain above the 21 exponential. Even if we break below this consolidation, print a higher low, and continue on, I will have made the solidified decision to hold strong as long as we hold above the 21 exponential. The most important factor that I'm looking for here, play it level by level. I don't like to do extreme targets to the downside, although I will do a Fibonacci retracement. We'll just get a clean chart. Let's do a fib retracement here to get an idea of where price action could fall. First, obviously, if this is confirmed as, as a bear market here with this structural lower high in conjunction with the all-time high here, continuation to this first low here is very, very, very possible. It's a very high possibility, right? Then we can bring out some lower levels here, right? We can bring out this little consolidation phase here all the way down to 22,400. We can bring out this region here, top of this range at 20,000 even, which is the prior all-time high. Bring out that region. Boom. Now let's get the Fibonacci retracements. Oh, I did it wrong. I got to go from the bottom to the top. Sometimes I get confused on that. Bottom to the top. And look at that. The 1.272 Fibonacci retracement level lines perfectly with this horizontal support here. It is still support right around the $20,000 region here, okay? And more importantly, the 1.414 here, $14,000. We were talking about that on a few streams ago. Somewhere around the $14,000 region could be a possible target for the downside on Bitcoin. Again, I don't like to play with hindsight trading. I like to play it level by level, but just to, satisfy the question. I do have a little bit, experience identifying potential major bear market targets to the downside, and the 1.414 Fibonacci retracement target at 14,670 is a very, very valid target in my opinion. If this does confirm as a bear market, right? Again, I don't like to trade like that. I like to trade level by level and pay attention to the 21. So I'll go back to that real quick. If we do see an open and closure below the 21 exponential, I'm going to be looking for this low first at 44,550 to be the first potential target to the downside. If we take this low out here at that region here, that will be warning shot fired. That will be a change of behavior confirmed on a daily candle closing basis, printing new lows. I will then, from that point, look for bounces back up, potentially back into this region, test the 21 exponential, potentially print a lower high before continuing onwards and downwards, right? But again, the 21 being the main catalyst, all information aside on Bitcoin here, the 21 being my main catalyst, as long as price action remains above the 21 exponential, I have no reason at all, per my trading rules, to close any positions, to make any decisions. I'm letting my position ride until the very, very, very last minute. Even if we see a breaking closure, right? Say this candle here just bloop, and then closes below, I still don't make a decision until I see a secondary open and closure to confirm the 21 exponential as new tentative resistance, right? At which point I will be forced to make a decision to pull out. Or if, my stop loss gets hit, right, which is 2% below the 21 exponential. If my stop loss gets hit, I'm out. I don't have a choice to make, upon that condition being met. But, consolidation is consolidation, guys. Let's go ahead and look at stochastics. Very, very evident shit right here. Bearish divergence playing out. Very, very, very critical signal. Printing new lows on stochastics below that critical 80 read here back into the bullish control zone. That is warning shot fired number 1. RSI breaking that triangle structure, back testing the exponential. Boom! Confirming it as new tentative resistance. Warning shot fired number 2. We are waiting for warning shot fired number 3, right? We can easily see momentum oscillators just boom, die, and see price action remain in consolidation. That's definitely a possibility, right? That is a possibility to be considering of. But at the bottom side of the range breaks, I'm going to be looking for potentially significant follow through as a result here to test the prior low first, right? But I won't get extremely scared until we see a change of behavior on the daily chart here with a candle closure below this prior low at 44,600, right? Give me 1 second. Some water. Getting some water. What? Ah, yes. For those of you that are watching, for those of you that have stopped by, thank you for being here. Hit that like button, hit that subscribe button, tick that little bell. All the YouTube support that I can get helps the algorithm and helps spread the videos, right? It helps the YouTube algorithm pop my videos up a little bit more, and maybe we can exponentially grow the channel a little bit. So, hit that like button, smack that little bell. You get all the notifications when I go live, when I post a new instructional video, so on and so forth, and definitely subscribe. But as far as Bitcoin is concerned, guys, again, I'm just being patient. I haven't made a decision. Since this point here. But I actually planned for this decision prior to the test of the 21. But I set up a little bit of a limit buy here on the 21. Not too big of a position. I have another limit buy on the 21 again, assuming that it holds as support and enters me in and continues on to new highs. But again, the risk is 2% below the 21. The 2% below the 20. And again, I'll show you how I do this. I do this every single day on every single closure because I want to be as precise as possible. I zoom right into that bad boy, right? And I get my little measurement tool, go to the top of the 21 and drag it down 2% exactly. That is where my stop loss currently is for price action here. So even if Bitcoin decides to die, boom, right? Boop. Hits my stop loss 2%. I don't lose 2%. I actually profit 45% to 50% on 3x leverage. So we're talking about exponential gains here on this position that are already secured with a stop loss, right? I had my risk management point, and as soon as I entered my risk management point, all the way back when I entered the position, every single day that the 21 increased in momentum, I adjust every single day. That's risk management. That's what it takes to have solidified risk management. You have to pay attention to that shit on every closure, right? You have to adjust your stop loss. You have to adjust your limit buys, your limit sells, your take profits every single day on closure. So price action, consolidating. That's my main disposition. Although we do have heavy warning shots already been fired off here. A couple of critical sell signals being played on stochastics and RSI. We are still within a range here. Again, not been in the range for quite we haven't been in this range for a long time, but we're starting to see the range play out. And again, unless we break the bottom side of the range or the top side of the range, I'm not going to be looking for any targets, right? If we do break the top side of the range and print a new high, this will be my next level here, 51,000 even. That'll be the target that I'm going to be looking for to be extended to here, again, if we break the top side of the range on a candle closing basis. And the bottom side, if the bottom side breaks, 21 is going to be my first target, followed by this prior low here. So that's going to do it for Bitcoin. I want to get on to some of my other positions. I've been managing AMC here. The target that I expelled to you guys yesterday has been met, has been confirmed. Although we did see a rejection on that target, I said, it's possible to see, $48 be struck once again, and boom, look at that. Boom. and then a sell-off here. We do see a little bit of waning momentum on the stochastics, which again, not a death sentence in my opinion. We have printed a significantly higher high, so seeing some pullback. Test maybe the neutral zone here before curling back up and continuing on would not be out of the question. RSI going basically a little bit negative here after breaking through the 50 read, taking out all these highs in prior here. Very, very, very nice and juicy stuff. The 21 exponential moving average strategy holds extremely valid for me right now, and as long as price action remains above the 21, I will be looking for price action continuation. Now, coming into the next couple of days, a break below 43 bucks, I will be convinced that a pullback to this region here at 40.25 is likely here. Again, this is our prior low right here. We've had major extension as a result. It's not out of the question to see some kind of pullback to test this region here as new tentative support. Although this region has been confirmed as support, it still wouldn't be out of the question to see a little bit of a top here, print a higher high, followed by printing a higher low, and then continuing onwards and upwards while we see momentum oscillators cool off a little bit. Maybe see RSI test that 50 read and then bounce back up. That's just one of the possibilities here. But I'm mitigating my risk off the 21 exponential, and the way this closed and confirmed as support, it is possible that we pop back up again tomorrow and test 48.23, and maybe even see an attempt to break through it. And if we do see that break through 48 bucks here, I will be looking for this region here, 53.50, as the next potential target for AMC here. Again, I don't follow the news, guys, right? I don't follow what people are saying. I don't pay attention to hype. The hype comes to me via the charts, via the 21 exponential. That's where I get my hype. That's where I get excited, right? So nothing too out of the ordinary here, in my opinion, for AMC. Again, unless we see some kind of catastrophic decline, taking up the 21 exponential, I'm going to be looking for more continuation as a result. So let's go ahead and move on to MMAT. I do believe that is a request. No, it is not. MMAT, I actually entered a full position in this today, mitigated my risk off the 21 exponential. Here's why. Boom. Number one, break above the bearish control zone. Signal 1 confirmed. Signal 2, RSI, printing a low, breaking through the exponential on good momentum. Signal 3, secondary candle closure back above the 21 exponential. The 21 exponential, you guys, is my main edge. Right? Even if momentum oscillators don't really line up all that well, if I see a secondary candle closure above or below the 21 exponential, I'm going to make a fucking decision, right? Take the edge. If I see an edge, I'm going to take it. Even if I take a little bit of a loss, taking the edge psychologically is a win for me, all right? I took the risk. I took the edge. It didn't play out. Whatever. I only lost 2%. It's better than not taking the edge and then missing out on 40, 50% to the upside, right? So I took this edge, I mitigated my risk off the 21 exponential. Again, 2%, right? 2% below. So if price action crashes 2%, I'm not going to get exactly 2% below the 21 exponential, I will be out of the position. However, the fact that we closed above with a secondary candle closure, I have no choice but to look for extension past this region here. This is actually going to be the first level that I'm going to be looking for to break coming into tomorrow here. And if we do break this region, this is the next level for MMAT, $4.28. However, if we put in the top here, still wouldn't be necessarily a bad thing because we have a higher high, right? We have a higher high in comparison to this higher high. We have the beginning formulation of an uptrend, right? So pulling back, even below the 21 exponential, confirming a higher low on $3.18 support would not be out of the question. But the momentum is definitely straight to the upside. I am going to be looking for continuation on MMAT. Very, very, very juicy stuff. And this is very important too. This is a structural low here. We have a structural higher low. So, if we see bullish continuation, especially above this blue box territory, I'm going to get very, very, very excited for MMAT as it has proven to be extremely powerful in the past, not only to the upside, but to the downside. I'm on the upside. Trading side right now, so I'm very excited. Very excited to see how this plays out. And we'll come back to this again tomorrow to see if my analysis holds true. We'll go ahead and move on. Hall of Fame. same shit, but this one is, I am much more confident on the Hall of Fame right now. 3 beautiful blasts to the upside. Signal number 1, RSI breaking through the 50 read, forcing the exponential back to a positive slope, taking out all these prior highs here, no longer consolidating in the bearish neutral zone. That is signal number 1. Signal number 2, new high printed at the escape of the bearish control zone for the stochastics. Warning shot number 2. Warning shot number 3, secondary candle closure above the 21 exponential. This is a perfect setup. I took the trade. Okay? Take the trade. The edge has been identified. Again, this is not financial advice. I'm not a financial advisor. I just want to give you my perspective of the trading sphere. Okay? My perspective is I'm 3 for 3 for all of my edges. Including the main one, the 21 exponential, right? We got the secondary candle closure above, which confirms the 21 as new tentative support. Boom, enter. I have no choice. It's in my trading rule book. It's literally, I can't even explain how serious taking your edge is. It's so important to take your edge. Even if it turns into a 2% loser, take the edge. Take your edge. That psychologically is so imperative to take your edge when you identify one, especially when one is 3 for 3, right? 1, 2, and 3. I'm confident that price action is going to continue onwards and upwards, likely above $3.37, $3.40. Realistically, I'm going to be looking for potentially a little bit of a pullback, maybe test this region here as new tentative support. Again, we've already confirmed the 21 exponential as support. Now we have a horizontal to potentially confirm as support. I'm not saying it has to play out that way. It doesn't necessarily have to pull back, but if it does, I will be looking at this region at $3.05 to confirm as new tentative support. However, I am extending my targets for price action up to $3.38 and potentially even higher, up to $3.75. We are within this blue box territory again. I think price action has free reign to do whatever the fuck it wants within this region here. Very exciting price action for the Hall of Fame. Again, I'm a long-term holder. And I've just decided to start trading it as well. So I have all of my long-term shares being held in one account, and then a couple of shares being traded in another account. So I did take a trade on this position. Again, mitigated my risk on the 21 exponential, 2% down. Although it's very difficult to do it when you're zoomed out. Roughly, right? 2% down. I'm not going to do the whole zoom in thing, whatever. But I'm in a position, right? 3 edges have been identified. We got confirmation above the 21 exponential. I have no reason to look for extreme downside price action. But that doesn't mean it can't happen, right? It doesn't mean it can't happen. Nothing is 100% guaranteed. We could easily, again, boom. We could easily just destroy this formation. This could be, a nice little bull trap. Come back down, test the lows here at 258. That is a possibility, right? I would be looking for levels along this region if we were to reject and fail on the breakout. First target would be, the 21 exponential, followed by the, the consolidation lows here at $2.84. But again, that's not my bias. My bias is like bullish to the moon, motherfucker. Take profits, trade it. Stay above the 21. Blah 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 blah. Right? You get excited when you identify a perceivably perfect edge. Right? Perfect edges being lined up. You built the perfect case for a position. Your brain's always like, yeah, it's going to the moon, but it doesn't have to play out that way. So that's the Hall of Fame for today. We're gonna go ahead and check out requests. BBIG is the first one. I didn't get any time frames for these, bro. So if you're watching this, I'm only doing the daily. BBIG, Finco Ventures Incorporated. Boom, 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 boom. Another beautiful case. Stochastics taking out the prior high, taking out this high, taking out this high, and right on the edge of this high, right? So we have a lot of evidence here, right? We have a lot of pointers telling us, yeah, there's definitely momentum here, right? RSI, again, taking out this high, testing the 50 read. We have evidence of a little bit of momentum here, and candle closure above the 21. This is where I get a little concerned, though, right? We got a reversal style candlestick, and I want to make it aware. Again, just because we have a reversal style candlestick in formation, that is not indicative of where price action is going to go. This does not mean, yep, it's guaranteed to go down. It's we got a bear wick. It's coming down. It's coming down. It doesn't have to be that way, right? It just needs to be on your radar that this is a reversal candle, and reversal is not indicative of direction of price action. But we do have a reversal candlestick with downside pressure. and technically a failure to break above the 50 read on RSI. So there are a couple of conflicting pieces of evidence here that tells us that this could potentially be a lower high. Give me 1 second, everyone. I'm having a good time. Absolutely having a good time. Now, price action is below this high, right? Price action is still below this high, although we saw a nice test of it. We are below this high. So there is a couple of pieces of evidence that says, hey, maybe this could be a lower high. We don't have confirmation on that, right? We don't have the top call on RSI. We don't have anything like that. But if this does confirm as a lower high here, I'm going to be looking for this support. $2.79 to be tested first, but I'm going to be looking for even more new lows here as a result. Again, if this is confirmed as a lower high. Again, highs, in my opinion, aren't based off the wick. They're based off of candle body closures, and we saw this candle body closure close significantly lower than this high here, which is lined up perfectly with this support, this resistance region here at $3.21. However, we have a couple of pieces of evidence that says this is a legitimate edge to take. In my opinion, I only need the 21, right? I use RSI and stochastics alongside horizontal support and resistance as additives, right? As strength and confidence boosters to my edge, to my perceived edge. I trade the 21 blindly and then use the other momentum oscillators to manage my position and follow the position from there. I'd be taking this position today. Again, this is not financial advice. I'm not a financial advisor. If I was trading this today, though, this is a confirmation secondary candle closure above the 21 exponential. I will be looking for continuation to new highs here. With the fact that we closed a secondary closure above the 21, I will be looking for extension to potentially break the $3.20 region and likely potentially test $3.57 before maybe seeing a little bit of a pullback to test $3.20 as support. Again, we have plenty of evidence that says we have momentum in this move, except we have staunch resistance, right? So look at both sides of the coin here. Look at both sides of the coin. You gotta expect nothing and prepare for everything. I'm preparing for a potential lower high and lower lows to be a consequence of that lower high, and I'm preparing for the 21 exponential to play out to new highs. So I'm covered, right? Although I'm not trading this, if I was, boy, I'd be covered. I'd be covered with a max 2% to 4% loss, right? You necessarily couldn't enter perfectly on the 21 today, but close enough is close enough, and I would mitigate 2% off my 21 exponential here as my risk mitigation point, and I would let it fucking ride. And that's going to be it for this one. Again, still not enough price action though. I mean, we've seen a couple of trades on this one with the 21 exponential, but nothing confidence-inducing, right? We still don't have extreme history on this one. This one hasn't been open a year yet, I don't think. Yeah, it'll be a year old in November, so take the analysis on this one, bro, with a grain of salt as a result of it not being that old. So that's where I'm going to leave that one here today. Piton, more history. Yes, I think this one has history. Yeah, all right. We have confirmation. We have a lot of the same signals lining up today in price action with the 21 exponential here. This one being more confidence boosting. Fresh cross back above the 20 read here alone is enough of a signal for me to say, yep, we got momentum. We got that critical break of the 20 read with both the stochastics and the exponential of the stochastics into the bearish control zone. Signal number 2. RSI. Boom. New high. Back above the 50 read. The fact that we confirmed a closure above the 50 read is enough of a signal for me to add confidence to my strategy here. Signal number 3, and the most important, obviously, this was your first candle closure. While it did barely close above the 21 exponential, it did close above the 21 exponential, followed by, boom, confirmation of that region being support. We are resting basically right on resistance right now. I am going to be looking for extension to this region here coming into the next few days at 121.20 unless we see some kind of rejection. Even if we see some kind of rejection though, back below the 21, we do have the potential to see a higher low in formation on this price action here. Why? Because we've seen price action take out this prior high. And I would be looking for a potential higher low at a 110 spot 82 or 100. We'll just call it 110, right? We'll just call it 110 bucks. I would be looking for a potential higher low. Again, if the condition of a pullback is met, I would be looking for a potential higher low along this region here before launching onwards and upwards. We do have the beginning formula for an uptrend. We have a low followed by a higher high, and now we need to see a higher low. So at the end of the day, continuation is my most likely call here, just for the fact that we saw that secondary candle closure above the 21. But again, prepare for everything, expect nothing. That's where I'm going to leave Piton. I think I have one more, Fubo. Again, I didn't get any time frames for this, so I'm doing daily analysis. Boom. Again, a lot of these, and see, this one is a little more concerning. This one is a little more concerning just because we've seen the 21 exponential play out before and it failed, right? You could have taken profit on this trade, but this wasn't one of those trades like on Bitcoin where, you enter the 21 exponential and then all of a sudden you're in the 21 exponential trade for, a month. This one here, just coming up for a couple of days and then swiftly declining. I do have an edge. Although this 21 is flatlined. That is not, confidence inducing in my opinion. We do see the potential for a lower high here. Definitely potential for a lower high and potentially, continuation of the overall range. RSI here printing this high here, and then we got barely back above the 50 read before back testing it. We are back testing it, and we are still above the 50 read, so we do have a technical signal to take a trade. What we don't see is the signal of Stochastics here back above the 20 read, right? We could easily see this price action fail while Stochastics remains coiling in the bearish critical zone here. Again, for this one, while I would take the trade, while I would trade this here, and this could be a perfect entry on the 21 exponential here, mitigating your risk 2% below. I would be very, 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 very cautious on this one here, just because we've seen a couple of instances with closures above and this little fake out move here. I would be very reluctant to take this trade. I would trade it. I would take it if I was trading this asset, but I would be very, 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 very skeptical of continuation here. I am, to be quite honest with you, skeptical of continuation, just because momentum oscillators are telling me, hey, it's a little weak. It's a little weak, right? We don't have actual extreme momentum pushing it to the upside. We look at Mmat, for example, boom, right? We got that signal on actual momentum here. Hall of Fame on actual momentum. This one being a prime example, boom, break above that 20 read, break above that 50 read, secondary candle closure above the 21 exponential. This is a prime case. This is a prime case for a position, right? Prime case for a position, which I took. But on Fubo here, we have rejection of resistance, back test to confirm the 21 is new tentative support. The 21 barely being a positive slope. We have a signal. We have a signal here. RSI losing that momentum after the 50 read break, looking like it wants to come back down and print a lower high. Stochastics not even printing a signal. Right, so we don't have all the evidence for a legitimate case for continuation on this one. So, to be quite honest with you, if we do remain above the 21 exponential coming into tomorrow, I will be looking for targets extension up to this region here at $30.50. But if we continue to reject, right, if we come further down and close below the 21, I'm going to be looking for this greater range to continue playing out until proven otherwise, with a projected target to the downside of 24. We'll just call it 25 bucks. I would be looking for price action to decreased to 25 bucks as a result of this rejection here, and the overall range, in my opinion, would continue to play out. A bottom side break of the range here, I would be looking for targets to move all the way down to 21, which just call it 22 bucks here, and likely we see Stochastics remain in the critical zone for the bears, and RSI dive deeper, closer to the bearish control zone here as a result. So that's kind of how I'm looking at Fubo. I would say, wait. In my opinion, I'd be very reluctant to take a position on this one just because I'm not confident in the price action. I'm not confident with the edge. I'm not confident at all with this one. So, take that with a grain of salt. And yeah, I think that's going to wrap it up for the stream, everybody. It's been 57 minutes. I appreciate everybody that came through, watched the video, dropped a couple of comments, hit that like button, hit that subscribe button, tick that little bell. Thanks for being here. I love you all so much. Thank you for supporting the channel. And until next time, stay safe, stay happy.